Well, the Bears are not in a good place. We are starting to hear more and more pundits come on the various financial networks and really talk down what has happened in the last 7 days or so. Obviously, if you're in the market, you realize that a lot of the stock market has gone up. Bitcoin has gone up. Pretty much risk on. In addition to that, it would be unwise not to highlight that the bond market is also higher. And again, I think we will talk a lot about this. But the one bear I want to highlight this morning is Mr. David Rosenberg. We've referenced David Rosenberg probably a dozen times over the last year. Every time that I can remember, he has been bearish. But in fairness, I don't remember all the conversations, so I don't want to use a blanket statement. That's never a good idea. But he is out saying that the stock market is in a mega bubble. According to David Rosenberg, the S&P 500 is at least 25% overvalued, which is quite the statement. Again, as we have heard from both Dan Bird and Taylor from Life Goal Investments on this channel, historically speaking, again, this is not a prediction. It is simply a review of history. The time frame between a presidential election and the end of the year has traditionally been good for stocks. Thus far, 1 week post-election, the trend appears to be continuing. Although you have to think, come on, we have to be logical here. You have to think there's a respite in here somewhere. It has been quite the rise for many a stock. But again, David Rosenberg is out talking mega bubble. On that front, I would be remiss if we don't highlight Bitcoin at least quickly. Bitcoin, I believe, hit a all-time high of just over 90,000 sometime last evening, or maybe it was this morning. I think today this morning it's resting about 86,000. But I want to ask you, the audience, I want to get the comment section going. It is going to be a simple yes or no question. I want to hear from you. Do you think Bitcoin just hits, doesn't have to close, doesn't have to stay there, but hits six figures? Do you think Bitcoin hits 100,000 before the end of the year? So we have roughly, I don't know, let's call it 7 weeks left in the year. I just want to hear who out there thinks Bitcoin hits 100 grand before the end of the year. Let me know your opinion. I'd love to see where my audience comes down on this. Again, as somebody who has an insurance policy, it is fun to watch. That is for sure. Another thing we have to realize again is, like it or not, Trump and the Congress that has just been elected is quote unquote the most pro-crypto government we have had to date. To that end, it looks like Bitcoin ETF iShares is now bigger than gold. Now, I want to verify this, so if you want to go out and look for me and verify, but yes, it looks like the assets in the Bitcoin ETF iShares is bigger than iShares for gold. Again, there's a lot of people that look at both as quote unquote stores of value or inflation hedge. So I thought that was pretty interesting. We got a lot of data from Mike Simonson. If you're not following Altos Research and you're interested in real estate, you are truly missing out. Really, what we saw last week is just the ultimate pause button. Again, according to Mike Simonson, there was only 49,000 new listings. There was only 51,000 new contracts, and price points came down to 380,000, up 4% year on year, but down week on week. So again, Mike Simonson and Logan and lots of the housing experts do expect a snap back this week. It will be interesting. It will certainly be interesting to see what's going on. Do we have more listings? Is there more buyers? That's actually my big question. Because as you know, I believe the housing market is broken. I believe the longer we stay at 7%, we're in a buyer's market. So the question I would have for Mike or Logan or Lance, all the housing experts that you and I talk to, or at least reference every week, is what breaks first? Do we get noticeably more supply? I don't think so. It's the end of the year, folks. We got Thanksgiving and Christmas. Who the heck wants to put their house on the market this time of year? Now, in fairness, this is historically a slow season, so that's not a new idea. I just expect there to be kind of a step function. Why? Because again, man, the move-up buyer's dead. The move-up buyer's not going. We're going to have rates over 7% today, very likely, given what's going on in the 10-year. Who the heck in their right mind would sell a house with a 3% mortgage, go to a 7? Nobody wants to do that. But if you have to do it, quote unquote, you have to do it. But again, it'll be interesting. I honestly think the longer we stay at 7%, the more people get used to 7%. We might see buyers, basically give up and either stay on the sidelines as renters or buy, something smaller, which will be very interesting. We have had some earnings today. I noted 3. Really, 2 of them are interesting to me. Tyson's Foods beat top line and bottom line. The reason I referenced them today or this morning is because in their earnings call, they actually referenced inflation. If you're not paying attention, you may not have caught it, but yes, Tyson Food referenced inflation in raw materials. It has been about 9 months. It's been about 9 months since we've had companies like Tyson Foods reference inflation. Now, again, in fairness, this is kind of a one-off. But again, you and I need to watch. Is inflation working its way back into our, into our companies? So again, Tyson's Food is just one example, but we should pay attention. Number 2, Home Depot. Home Depot, if you don't remember, has had some very tough comps the last several quarters. They've had declining sales. It looks like this quarter is a little bit better. They beat top line, beat bottom line, and actually raised guidance. So they are feeling a little better. And then finally, Live Nation. Again, Live Nation is interesting to me because, again, it's experiences. Are we still paying up for experiences? And again, remember Wynn and then Singapore Airlines and now Live Nation. Live Nation missed on revenue, but did beat on earnings. Again, missing on revenue being the big deal for me. So again, it does appear, at least for the moment, that the bifurcated consumer, the top end, the top 20, the top 25%, appears to clearly have taken a pause. Now, will this be a pause through the end of the year? Come on. We like to shop. It's the holidays. I doubt it, but again, we are going to have to pay attention. We did get a couple of other earnings. I guess I'll reference Hertz. Hertz missed on top line, missed on bottom line. Shopify beat top line, beat bottom line, and raised guidance. So again, lots of earnings that we can look at. Shopify basically meaning, hey, we're still spending money on stuff. I checked the 10-year early this morning. It was up 0.08, which made me think that we may have 7% mortgages again. I think yesterday they were at 6.99 or something like that, maybe 9.7. This just goes to tell you that, again, I think the bond market was right. I believe the bond market 6 weeks ago, 8 weeks ago, when I was declaring higher for longer and that all these experts who were calling for 5% mortgage rates were wrong. And again, when I made that call, it was way early. And I took a little bit of heat for it. But now, again, I think the bond market is right. What do I mean by that? I believe the Fed is going to cut less than expected. Certainly going to cut less than expected, at least in the short term. To that end, Loretta Mester, former Fed president, actually was out talking about fewer rate cuts are coming. She said the market is right. And again, the market to her is the bond market. The market now is expecting only 2 cuts in the first half of 2025 and 1 cut in the second. Again, I think we are about to get what's called the dot plot. Again, we will see what the Fed is thinking. The last one we got, I think, was in September. What are they thinking? Where are we going? Where's the economy? What's inflation? Where's rate cuts? Again, I think rates are higher for longer. And again, the higher for longer is becoming a theme. We have to ask ourselves, what are the ramifications of higher for longer? Well, you and I obviously are in the real estate game. So higher for longer means, quote unquote, less demand. Higher for longer means the move-up buyer is on the sidelines. Higher for longer means it's hard for first-time home buyers. Higher for longer means builders need to build smaller. Higher for longer means builders need to eat margin to move product. Higher for longer means existing home sales will stay depressed and, quite frankly, might set a cycle low in 2025 for total transactions. But the picture is bigger than that. I believe higher for longer is going to roll up into small and medium-sized businesses. There's a lot of small and medium-sized businesses that have debt that rolls. And this debt was maybe originally financed at 5, 6, 7%. Now it's going to be financed at 9, 10, 11%. How many of them can afford an extra 4 points on their debt? Not many. What will that mean? Well, frankly, it'll mean some go bankrupt, some go bye-bye, some just get reorganized. It will likely mean head count freezes, because you can't add head count. That's that's an expense. If your debt expense goes up, you got to take it from somewhere. Maybe it means layoffs, because again, you got to right size for the debt picture. It probably means that smaller builders still can't build right. It probably means that commercial banks will be forced to recognize bad debt. How about this story, folks? In Chicago, 70 West Madison Street. 70 West Madison Street is a 57-story building, that was originally purchased for $374 million in 2014. A decade ago, this building was purchased for $374 million. In 2018, the owners went back and refinanced it and took out a new loan for $305 million. Bingo, bango, boom. Just retraded $85 million. Folks, 77% discount. I keep telling you, the pain, the losses are in commercial real estate. Now, this building happens to be an office building, which is being crushed by lack of occupancy, wrong footprints, wrong plates, all of that. But we are going to see these same kind of discounts in Class B and Class C apartment multifamily. They're just simply overpaid, bad assumptions, low NOI, lower rents. It is ugly, ugly, ugly out there. And again, if we keep rates at 7%, the banks won't have a choice. Extend and pretend will go away. They will take their lumps. Equity will go to zero. Banks will take some losses, and we will retrade these assets. I do want to talk about something real quick. I want to talk about Dwayne The Rock Johnson. Yes, The Rock from WWE fame. I read an article this morning that talked about Dwayne The Rock Johnson, early career, before he'd done one thing, before he was anything in Hollywood. And this will become important in a minute. Apparently, Dwayne The Rock Johnson fired multiple agents who didn't believe in his goal. You see, Dwayne The Rock Johnson, before he had done one thing, wanted to be bigger than Will Smith and George Clooney. Now, if you know anything about the time, those two actors happen to be at their peak of influence and acting in movies and money and all of that. Dwayne The Rock Johnson wanted to be bigger than those guys. And his agents, probably rightly so, didn't believe in his mission. This is a mission that Dwayne had at his core. So why do I bring this up? You have heard me say repeatedly, sometimes you have to fire your friends. Folks, if you are trying to make a change in your financial situation or your health or your relationship with God or your kids or your whatever, you have friends, rightly or wrongly, that don't believe in the same thing for you. They don't want you to change. They want you to stay where you are. Fire them. You only get one life. There is no game reset. There is no do-over. If you want it, I mean, like, want it, fire them. Fire them. Just fire them. Get around new people. One of the things that I am really, really happy about is our One Rental at a Time school community is growing, now growing seemingly every day. I want to thank Spencer, Noah, and Denny for joining in the last 24 hours. Again, folks, don't forget, by joining school, you're now going to get around 325 or so other amazing individuals, 3 accountability groups, lots of free stuff. In fact, Jason Pritchard has committed to getting us two new videos to help you. He has a 90-minute section that he's going to give us on his entire pipeline, how he manages leads through closing. He's also going to give us a live seller call, right? A lot of you talk about buying off market and how that works. So Jason, if you see this, thanks, buddy. I'll be working with your team to get those. What I'm going to do inside school, folks, is I'm going to make those available at level 2. Again, you get to level 2 really easy. Introduce yourself, comment a couple of times. You'll go from level 1 to level 2 very quickly. But again, I want to encourage you to join. We keep adding more and more value. Thank you to my community of millionaires for giving. But again, join, get around other people. This community, if your friends don't want to do real estate, don't want to be financial freedom, don't want to work, sacrifice, you know the drill. My community will help you. We are all on the same page. And let's not forget, if you are a lady, a female, and you are, often think that real estate investing is a male-dominated industry, we actually have a subgroup called Ladies of ORAT. Again, you could come in, you can comment, you can be part of Ladies of ORAT. Many, many powerful, very successful ladies in ORAT, because again, it doesn't matter, male, female, you're going to have the opportunity to succeed. But sometimes you just want to communicate together, and that is totally okay. So again, sometimes you need to get in the right communities, and I am trying to do that for you. What else do we got? The 10-year we talked about. Oh, last thing I want to talk about is actually 2 things. We'll go to oil first. Yesterday in our live stream, I wish I remember who asked. Forgive me, I don't. But you talked about oil, and I didn't have a really good answer because I hadn't looked at oil in a while. But I agree with the comment, or at least the sentiment yesterday. I think we need to watch oil. Does it break lower? Now, I don't think it's going crazy low, because I think the Saudis and all of that will eventually cut production. But, could we see oil sub 65, sub 60? I think that's interesting. And again, if you don't know, oil is in seemingly everything. It's obviously part of transportation. So again, cheaper oil means we could have some deflationary, or at least disinflation, certainly disinflation. But in some goods, it actually might be deflationary. So again, this is something to watch. So the last thing I want to talk about is a chart that the National Association of Realtors, NAR, put out. So again, this is going to be generations. So again, Gen Z, millennials, Gen X, boomers, and even the silent generation. Who is buying and who is selling? I thought this was pretty interesting. We'll go through the numbers again. You can find it on X. I think I retweeted it, so you can follow it there. Gen Z, 3% of the transactions on purchase are Gen Z, while 2% are selling. I actually was surprised that Gen Z is actually 2% of all sales. How about millennials? Dude, millennials buying. Millennials account for 38% and are the largest quadrant of buyers. Again, there are a lot of negative Nellies, a lot of doomers out there saying millennials can't do this, can't do that. Well, 38%, and again, the largest percent of purchasers are millennials. On the flip side, we have 23% of millennials, or of sales, are from millennials. Gen X, my generation. First off, we're getting crushed by millennials. Millennials are at 38% on the buy. Gen X, we are at 24%. So yes, we are getting spanked. We're actually getting spanked by millennials and boomers. We are often called the sandwich generation. We're between these two big generations. And yeah, Gen X getting smashed. And selling, we're 23%. So we are on the same page as millennials. Okay, now boomers. Boomers, 31% of buyers are boomers. Wow. I don't know about you, but that shocks me a little bit that boomers are still buying in that quantity. Not to be outdone, boomers are actually the largest sellers. Yes, folks, boomers are the largest sellers at 45%. Almost 50% of all sellers, almost, are boomers. The reason I found that interesting is how many of the doomers, crash bros, have been calling for the wave of baby boomers selling, right? I forget what they call that. The silver tsunami. That was it. The silver tsunami is back. Well, again, based on these numbers, it's already here, folks. Boomers account for 45% of all sales. That sounds like a tsunami to me. And again, prices have not fallen like the doomers and crash bros want you to believe. And then finally, the silent generation. I have to admit, this was the most surprising stat for me. The silent generation, I don't even know when the silent, like, hold on. Hey, Siri, when did the silent generation start? So the silent generation is 1928 to 1945. So what is that? The youngest silent generation is what? 55 plus 24, 79. The youngest is 79. They made up 4% of purchases. That is shocking to me. Now, they're 6% of sales, so that kind of makes sense to me. But they're 4% of purchasing. Now, I wonder what's going on. Are these just the richy rich buying homes? Are these grandparents buying houses for Gen Z? I have no idea. But again, I was shocked by that. So, folks, at the end of the day, let's do one more thing together. Let's congratulate somebody. I want us to congratulate Brandon. Brandon got another deal, folks. Again, remember, we send out gold cards for your first deal, black cards for every deal you close after that. And if you want, we even now have a brand new purple card for anybody who finally writes their first offer. I know a lot of you are struggling. I know a lot of you are stuck in analysis paralysis. Sometimes you need a kick in the butt to write that first offer, to write that first disrespectful offer. Now, if you do that, I want to send you a purple card because I want to recognize you. I want to prove to you that you didn't die. You don't die by writing your first disrespectful offer. But at the end of the day, folks, again, Brandon, congratulations. I will drop your card in the mail. It is already stamped, and it'll go out today. So, folks, again, have an amazing day. Keep being awesome. Join school. Don't forget to buy your tickets for our Vegas event. We do have a lot of surprise guests not announced, some keynotes and the like. And yeah, I look forward to see you in Vegas in person. Take care. Later.